Hello, hello, and welcome to the Market Movement Intro Series, Playing to Structure. This is going to be part two, continuation of the last video that we did, in which we identified brackets and trends. What we're going to do is we're going to be diving into a deeper understanding of those very basic, simple concepts. I'm going to show you guys how to kind of plot all that out on the daily chart and the 15-minute chart. And then using this information, what we're actually going to do today is we're going to replay Friday's price action. And we're going to do nothing more than draw out our trends, our supports, and our resistances, and pay attention to points of interest that we find during our daily and our 15-minute charting that's going to help us make really good decisions as price action is presenting us with opportunities to play. So hope you guys are ready for some fun today. All right, let's see if I can get this screen over. We are going to be using the Trading View platform today for this. One thing that I do want to stress to everybody who is watching this video, I do not trade off of the Trading View platform, but I like its interface and I like that you can do replay stuff. All right, so here we go. What we have here is we have a daily look at the SPY. And I have arranged this chart so that we're looking about 90 days back. If you did watch my previous video, you'll recognize that the 90-day or the 3-month daily chart is what I use to kind of get my bearings when I'm starting out. It's the chart that I use to form my opening narrative for the day and what the market is currently telling me for information. Now we have a couple lines that are already drawn on here, and the reason I drew these on here preemptively is because they are from a volume study that I use in the Think or Swim platform. So first and foremost, we have our 90-day value high and our 90-day value low. So these two lines right here, what this is giving me for information is this is showing me where 70% of the market trading activity has happened over the last 90 days. Why is this important? Well, when we talked about brackets and trends, and I specifically said to you, the market brackets and trends on all time frames. That doesn't just go for the daily and the 15, which is what we used to illustrate the point. The market's also bracketing on a much broader scale. One quick thing I want you to notice about just looking at where these lines are and what's going on with this price activity. Do you notice that the market is bracketing inside of those lines? And this is on a much larger scale. But the idea is the same. The concept is the same. The market is looking for areas where it can fill itself out sideways. And when it's finally determined that value has moved up or down from that point, that's when it breaks and moves to trend the opposite direction. Another thing that we tend to find is that when we have extreme moves towards one end, or we have tests that fail to break, they often push price action towards the opposite end. This is just kind of something that happens with brackets, and recognizing this on the larger scale is going to really help you when you start to notice this type of price action on the smaller scale, especially if you're day trading, right? Because we're mostly looking at the 5-minute chart to really see what's going on. And when we're looking for really quick entries and exits, we're looking at the 1-minute chart. And believe it or not, the market is trending and bracketing all the way down to the 1-minute chart. So let's kind of go over that again real quick. Again, I love the drawing tools and the capabilities of the TradingView platform. So real quick, we're just going to kind of go and we're going to blast out some of the brackets that we've seen in the market. Some of the, right after I say how much I love this software. We're going to bracket out some of the stuff that we've seen in the previous price actions. Because one thing that I want to really point out for you guys is how this all plays apart with each other and where it's going to give us some even better information moving forward. And this is almost a bracket. We'll count that in, and I'll show you why in a little bit here. Another trend. Bracket. Here we go. Here we go. And I'm also going to explain why I'm picking the certain points that I am. Okay, so real quick, we just pumped out all the different brackets that kind of occurred within the last 90 days. And I mean, you can really see this, right? We have this vertical activity where it goes up and down, and then the market moves out sideways. So we have our trend into our balance, or our trend into our bracket. We end up trending in a different direction after we failed to break, and we form another bracket. We trend, bracket, trend, bracket, trend, bracket, etc., etc. Now, one thing to be aware of is that the market abhors vacuums. The market does not like when price action actually trends through an area and doesn't give itself opportunity to make certain that that price was not a valid auction. So one thing that I want you to notice about these zones is that most of the time they tend to overlap or come very close to overlapping each other. And the reason being is, again, for what I just said, right? The market abhors a vacuum. So whenever we create a space that's too large, so for instance, from our bracket back here in January, when we dropped down to that huge low, the market had to come back up because it needed to make sure that we didn't need to fill in all this space from here to here. So we filled in some of that space, but look at this again. On the way back up, we made another gap, we made another piece of space that, what do you notice here? This bracket fills in that space. We drop down nice and hard, pop back up. We filled in some of that space between the drop, but there was still more space to be filled out. The market needed to make sure that there was no more business to be done below this value point, this larger bracket. Up here, the market was making sure that there was no more business to be done up here. Down here, the market was making sure there was no more business to be done down here. And now that brings us to where we are now. We had been building out a bracket, and one of the things that we saw going into Thursday and Friday is we did eventually break out of it. So at the very end of the day, Thursday, we broke the bracket. So going into Friday, unfortunately, we do already know how Friday played out. So that is going to be cheating a little bit when we replay this later. But had we not known this information, knowing that a break had just occurred, the first thing that we'd be looking for is, okay, how is market activity going to respond up here? We've just broken out of the bracket, and we know that once a bracket breaks, it needs to retest itself or it needs to continue its trend. So Friday, it did just that. It tested the highs, and we noticed that there wasn't quite enough excitement built yet, so sellers took back control and pushed us all the way back down into the bracket. But what did we notice after the fact? Price action then continued to climb back out of the bracket, signifying that price action was in fact ready to move up and onward. When we come into next week, Monday is really going to signify for us if we're going to be extending our trend or if we're going to just be extending the range of the previous bracket. So Monday, you're really going to be wanting to pay attention for if we have a pullback or if the trend starts to fly away from us. If the trend starts to go, go with it. Don't try to second guess it because we've already got this information showing us what's happening. Now, the other cool thing that we can pick from this in seeing this is we can use previous information to help give us some more logical ideas of where potential price action can move to. Because remember, as the market's trending and looking for that next balance area, what it's doing is it's moving price towards where perceived value is. So we look back at the chart and we see that once upon a time, a little bit back here, we did have an area that we're going to mark out because this kind of looks important to me. I want you to look all the way back to the left of the chart, see where the lows of those candles are, right where the wicks touch, and then I want you to see where this ends up touching these candles as well. We can kind of split the difference a little bit here, and we can end up putting our line right here, all right? So it's just at the top of the bodies of these dailies, and it's just a little bit above the low on the wicks here, and it does also intersect a tight area on these candles as well as a wick during this trend down. So realistically, we can look at this and say, this is a likely target for market activity. It's a likely target for us to see a potential stall or an area of resistance when we're moving up. because the last time that we broke out of where perceived value currently is, we gapped up here and here, we ended up rejecting back down. So now the big question is there value now up here that the market is trending or going to trend towards to discover, which, hey, would you look at where the bottom of this little bracket is? Okay, now again, we can't predict the future, right? We can't look at this and say, okay, this is absolutely what's going to happen. But these are the things that I want you guys to recognize, that with price action and how everything moves, this isn't an illogical prediction. We won't know until we know. But what we can glean from this is, if market activity does move up, if we do break through this resistance point, there's a pretty good probability that this may be where our next bracket zone is, trending upward. Again, we're not going to know until we know. But that's all I wanted to cover today as far as trends and brackets here. What we're going to kind of look at now next is isolating where we can find points of resistance and support. So we've got our first one right here, looking at that. If we were to come back down in, what we can recognize is that the bottom of our bracket would also function as support. If we were to continue traveling up, another area we should be paying attention to is where the last bottom of a bracket was. You can also see that there was some contention here with candles earlier on, and so forth. And then another big spot that we should be paying attention to here. And then, of course, way up here. So these are going to be future targets for us to look at. And the other thing that we can consider is that within these brackets, we're going to have a focal point where the most volume occurred. Generally speaking, that is towards the middle, but it doesn't always have to be. But between these points, where the point of control is, or the highest point of volume is, are also areas of interest to us, because that's where we can see price action stall, bounce off of, or inevitably push through and then form the next shelf for us to move into our next leg. All right, we're going to keep some of these. No, we're not. We don't need to keep any of these, but that was just for demonstration purposes. If I were charting this out for myself for future knowledge, I would keep some of those lines, but I also don't like to clutter up my charts too much. More so, if I see price action moving up, I'll recognize and remember where certain points of interest were for me. So let's look at our 15-minute chart. And we actually want to erase all of Friday's data. So this is the cool thing that I was talking about with the replay function of TradingView. Watch this. All right, so this was all of Friday, right? Boop. Guess what? Friday's gone. Never happened. Okay, well, it did happen, but we're going to pretend that it didn't for this next segment. What we're going to do is we're going to use the 15-minute chart to kind of start to build our trend lines, our resistance lines, and our support lines for the day moving into it. Now, the first thing that I want to point out to you, the bracket that we drew in our daily, as you can see, this is a pretty solid zone to carry forward into our 15-minute. We don't have to change anything here. This lines up well. So the first thing I want to do is I want to look back to some of our lows that we had previously and see if we can discern any trends that we should be paying attention to as the market continues to move forward. And the technique that I'm going to be using for drawing trend lines today is the point and drop method. So all that is we attach a trend line to our low or our high, wherever we're anchoring from, and then we just swing it until it hits price action. Now, one of the first things that I'm noticing is where we would get the most touches with this actually kind of bisects right through the middle of our price action. So that tells me that this particular trend is over. The structure has broken this trend. But just for the sake of argument, we're going to kind of look at that so we can recognize why this isn't something we need to be paying attention to anymore. So we can see that from this trend over the past few days, playing to it was perfect. Price action was moving up, But once it finally trended as far as it could, and it was met with opposite reaction, that's when we had price action coming back down to the trend, couldn't break out above, and this is where we start to break structure. The concept of breaking structure is very important, and one that you should be aware of and ready to recognize on any time frame that you're trading. Once structure breaks, that means your narrative is changing. What you were anticipating, what you were building towards, what you're expecting the market to do, you can't expect that anymore. Because if we're building a picture and all of a sudden, or for sake of an argument, let's say we're building a picture of a fire hydrant and we're starting to see the shape, our brain's really filling it in because that's all this is. Our brain is just filling in the incomplete picture. And then all of a sudden we recognize that the whole thing is looking like a duck. Well, we started off thinking it was going to be a fire hydrant, but now the structure of the fire hydrant has broken and we're starting to see a wing and webbed feet. Okay, so clearly this isn't a fire hydrant anymore, so we should reassess what's going on. Weird analogy, but I hope that worked for you to understand what it is that I'm talking about and trying to get across here. Price action is going to build out a picture for you. It is your brain's responsibility to put the rest of the picture together before it's fully formed. But it's our responsibility as a rational human being to recognize and to draw boundaries for that image. So that way, if the image starts to break outside of those boundaries, outside of those lines, we can tell our brain to stop filling in that picture because we're wrong. And when we make trades based off of wrong assumptions, that's when we can get locked into that hold and hope mentality. That's when we can get stuck on that whole, well, this is the picture my brain was seeing, this is what I drew out. Like, well, clearly it has to do that. No, the market does not have to do anything. That is why your structure is going to change throughout the day. That is why your drawings are going to change throughout the day. And that's why you need to be aware of where your main focal points are, where your big picture items are, where other time frame traders may be jumping in or out of the flow in the auction, and making sure that you're adjusting your trend lines as soon as your structure breaks. So let's try structure from here. Let's see if this is a little bit more what we're looking for. Okay, so this one's not bad. I like this one because we've got some really solid activity touching here. We have an attempt to break below it, and then eventually we're forced back up into it. This would be good on like a 5-minute chart, but for the sake of a 15-minute chart, we actually don't want to swing activity quite like that. So this is where we would draw ours for our 15-minute chart. And we could, in theory, if we were feeling adventurous, we could probably set it to there instead. This is going to be where judgment and time is going to be an invaluable teacher for you over the long run, trying to figure out where the best point of contact is for your trend lines. Because whether you're putting it at the bottom of a candle, the body, or at the bottom of a wick, or vice versa, tops, it's okay to have pieces kind of break through it, as long as the intent of the structure isn't changing. So, I mean, something like this, really we've only got one wick poking through it, but that was on a drop, and that tells us that it was aggressively trying to test the structure that we see forming, and it couldn't pass that test, which is why it held strong here on the next pullback, and why it held strong here on this pullback. So I actually like this trend line for our 15-minute chart, and we're going to keep that one going into it. We're also going to change this to a different color, so that way we remember this is part of the 15-minute structure. And the idea is, if the 15-minute structure breaks during the day, we go back to our 15-minute chart, and then we reassess structure. If the structure breaks in our 5-minute chart, we look at the 5-minute chart to reassess, okay? So there, we've got that line. Now we're going to give ourselves a tertiary line here too. Now with a tertiary line, we go from the point of contact where our trend hit, and then we draw a new trend line. So this is our tertiary trend. We have an uptrend that's been forming over the last few days, although we can definitely see it's been consolidating along this top here. And then we have a tertiary trend where all this extra consolidation has been happening too. So right here, kind of looking at this, I can tell you that our price action is starting to wedge itself into a pressure point. This is going to break one of two ways. Now, of course, remember, we already know which direction it's going to go because, well, we've got that information. But yeah, so here's our trends on our 15 minutes. And we are going to go ahead. We're going to move to our 1 minute chart because we're going to start our fun little experiment now. There we go. All right, we're going to go ahead and play this just so that way we can get to the start of the day. So then our previous day clothesline is going to make a little bit more sense, right? So this is the end of Thursday. We're watching play out right now on the 1 minute chart. I currently have it set so that every 3 seconds we get our next 1 minute candle. So this is going to allow us to play out Friday at a slightly faster pace. And getting closer to that finish. We've got about 5-6 minutes left to go. You see at the very end of the day, we made that last attempted break of the bracket. We came back down to test. The test succeeded, and we push to where we finally close at the end of the day. All right. I think I hit that right on the money. Oh, we need one more candle. Boom. Nope, darn it. That was our open. Okay. Well. Oh no. I just totally messed that line up. I think I can do this. Aha! Yes! Oh, TradingView is so cool. Oh, did I? Dang it. All right, so by switching that, I actually just put all that information back there. We're not going to do that then. Okay, let's try this again. I swear, when I actually get this working, it's really cool. Okay, so here was our final candle of Thursday and the information that we had going into Friday. So the first thing that we want to be paying attention to is that when Friday opened up, or our overnight session, Friday opened on a large gap well above our previous day close. Now, as a rule, I try to keep myself out of the market for the first 30 minutes to an hour because this gives me more time to digest the information as it's happening and to see the structure build out a little bit more before I start deciding whether or not to make plays. On top of that, you have a lot of volatility that's going to be coming into the market very early on. A lot of people are setting their trades up before they head off to work. But here's the kicker. We are on a gap, so we do know that there's a potential play towards that close. So one of the things that we can kind of wait for and assess is we can look at what the first couple minutes do. So after 3 minutes have started, we can see that the market is starting to push up a little bit. So right from there, what we can do is we can take a decent risk to reward play. Here's another really cool feature. So we can essentially set ourselves up to enter into a play if we break lower than the current low, right? If we were on Thinkorswim, we could essentially set our order and be ready to go. I love how TradingView shows this stuff out. So we set our entry point just below the current low, and we have a 5.8 risk to reward ratio. So if we get entered into this trade and it flips around, we're going to lose 10 cents. But if we get entered into this trade and it does move to fill this gap, well, we could take 58 cents. So we're going to let this play out a little bit and see if it ends up entering us into the position. So you can see it's still kind of struggling. It's playing around. Oh, here it goes. Is it breaking? Okay, it just broke and it entered us into our position. We have our stop. It's just a little bit above the body of that candle. That right there, that would have kicked us out of our play and we would have been out of it. Had we done a slightly wider risk to reward. This would have kept us in the play. So what I wanted to illustrate right there for you guys is we took a really good quality risk to reward play inside of crazy volatility. In theory, the play worked, right? Our entry timing was decent. We had a good set point entry. The only thing that knocked us out was the morning volatility. So again, if we're going to make plays like that, we have to recognize that we have to give ourselves a little bit wider girth, a little bit wider room or bulk on what's going on. But how would we know? So the only logical thing we could do is we would want to set our stop loss at the top of a previous candle before the break started. Now, again, is this a good play? This is 5.8 to 3.0. That's the only way that we would have ended up staying in this. That's a 2 to 1. 2 to 1 is pretty good as long as you're hitting it consistently. Now we're going to let this play a little bit more. So we came down, we closed the gap. Now that the gap is closed and the market's not trying to move further down, this is our first sign that we may be wanting to get bullish today, or we may want to be seeing if the market's going to try and break up to our value high. All right, we've got our first bits of structure starting to form. We've got our low, we've got our high, so now we've got a resistance that we can work against. So we're just going to draw that in and we're going to kind of see what ends up happening here. All right, looks like we're getting some bracketing on the 1 minute up at our high. Some resistance here. Okay, now on our 1 minute, something that we can start to notice. We've got a high for the start, our low to the gap. It pushed up and started testing that high. It did break the high, so we've got a higher high. Structurally speaking, we're starting to look at an upward channel. This right here, we can make a decision. It doesn't seem to want to break. This does seem to be holding so far. Again, we've got 3 minutes worth of information to take, so we can go ahead and we can make an entry point. Target of our high. So this would give us an 8.4 to 1 risk to reward ratio if we enter at the trend line. Boom. Okay, so we did lose. Oh well. We move on to the next play. Now, when I told you structure has broken, we need to reassess that. That's our trend line now. That's our new low. Got another bracket starting to form here. Okay, another new high. This is good information. It's also on enough of a break that our candle actually created a little bit of volume here. This is significant. We definitely want to be paying attention to this. All right, so moving through, again, everything's moving fast. We had this break, this retest, and then our third candle right around here. This is what we get, or this is what we call when we have a break of the structure and the trend is starting to go. So we can see that we have this bracketing action here on a much shorter time frame, or you can see a bracket, trend, bracket, 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 and we've finally broken away from our morning structure. So we have another relatively safe entry that we can take at that resistance line. We wouldn't take it on the initial break. We would wait for these candles to come back down and test it out. All right, starting to get away from us here. So at this point, we have put on a winning trade. Immediately, we want to see what's going on here. Okay, we just broke out of our 90-day value high. Well, that's a very significant price point. We should probably move a protective stop just up to below that. So essentially, this. That's getting close there, huh? You can see that it's starting to hit that 90-day value high. Now again, I want to remind you all, this is a line we drew from our daily, taking information off of the 3-month look. That held as support. That is a really solid support line. This tells us that our price action and activity has broken out of value and is now starting to run because it has tested and it has found support. So the next thing is we got to figure out, well, how high are we going to go? Where are we going to go? Well, there's no way to tell that. So essentially, we just want to move our protective stop up on this play as it's going because we've already captured it. We've already got the win. And now we're starting to get that bracketing consolidation. Might be a good time to just take our profit. And we're out of the play. Remember, structure evolves as the day goes, so we want to make sure we're staying on top of this. Okay, our first significant break. We've hit a high, and now it looks like we are seeking out a new low. But where's that low going to go? Let's pay attention. Looks like our trend line held a little bit. We're going to redraw it. There we go. Now we've got some nice, crisp, solid touches here. Let's see if this structure maintains. All right, we've had a very solid structure break. This bracket is starting to expand its action and activity. So what we're going to want now is we're going to want to be looking out for a short position. Where is it? We're going to be using this resistance line as our entry point. All right, so we've broken everything. We missed an entry because of how quick that all moved. We've now broken through a major support. So what do we know about brackets and trends? Well, we know that a bracket will continue to build upon itself until it tests and breaks, and then it tends to retest itself and make sure that it was in fact a good break. Well, we broke through that value high, we tested price action, we broke the upward trend structure through sideways activity, and then we broke the value high. We have a pretty good entry point here. And again, because we're playing off of the structure of the market, we can modify our risk to reward to just benefit us, right? So the first thing that we're going to want to target is our primary structure here. So we've got our entry right here off of our value high. We are short. This was a pretty awesome break. Now, when you get this kind of volatility on a break, if you took your position and we ended up breaking the structure here, what we want to be worried about is potential snapback, sucking away our profits. So if you're in multiple contracts or if you're holding multiple shares, taking some of your profit off the table is not a bad idea in areas like this. I mean, it hasn't hit our final target. We're actually looking to see if it'll end up filling the previous day close. And it sure enough did. This is starting to look like a short position that we can hold on to and just push our stop loss up on. So once we've gotten a winning position, protective stops are what we're looking for. So if we did in fact enter on the break of the value high and that retest, so we have the break, the retest, couldn't get back above it, so good place to go short. We can look at our previous structure and recognize that here's kind of the midpoint right here where everything was kind of bracketing around. So we can determine that our stop loss or our protective stop is probably going to be just above this point, because if the price action does come back up but ultimately is going to be moving down, then that's where we would want to look at for potentially taking that off the table. See that it comes back up to our previous day close. It's having trouble. We could, in theory, try to play another short position here, see what happens. We could add to our current winning position. Again, this previous day close, this is now a major resistance. It was support because we couldn't break it in the morning, but now this is in fact a resistance point. And the other thing to take into consideration, well, our day's structure has now ultimately changed fundamentally. So we can go ahead and get rid of that. And what we can start to look at now is the fact that we are in a very aggressive downward trend. And we can build us some lines here to help us see that as well. So we'll take another short position here, see if we can squeak some more out of it. But of course, if we're going to take a position, we want to make sure that we have an idea of where we're going to be looking for. So let's look back a little bit real quick and see where the next support would be if we break lower than that point. I mean, we could try just to play it from there to there. Nothing wrong with that. But if we end up breaking through here, looks like this. That was a peak resistance point. So we're going to go ahead and mark that off. And that is going to be where our target is for our short play. Yeah, close enough. It's still maintaining that really aggressive trend line. So that's very promising for this position that we took. Had a little bit of consolidation there once it broke back into the bracket. Oh boy. All right. Well, we just took our profit. Now remember what I told you, our 15-minute chart, once that breaks, we have to reassess it, right? Now I'm not going to switch to the 15-minute chart because I don't want to mess with that again. But we can do this, change our tertiary line. All right, so I'm actually kind of liking this line here, right? That's got some solid touches. Let's see if that ends up holding as some kind of support. All right, so we're starting to get some break of that tertiary trend line. So we can go ahead and get rid of that. We've still got our resistance up at our previous day close. Seems like there's some support building at our bracket ceiling again. This is starting to become some pretty volatile noise. So the big things that we want to be paying attention to now, we've already took a couple of winning trades, and we did take a losing trade just by playing the structure as it was kind of popping out today. But in here, now that we've broken back into the bracket, we can see that the market is starting to become indecisive again. That initial run where everybody was feeling pretty good and followed by that big liquidation break, it's pushed us back in here, and now people aren't so certain again. Everything's kind of it's moving sideways. We're balancing out. But again, this is a pretty big looking bracket. And one of the first things that we want to be paying attention to is that our 15-minute trend so far has held. So what we're going to do now is we're going to give ourselves a tertiary trend line off that, because we've already got a resistance point here, right? We don't need to build anything more off the downside. And we've now broken that structure. So if we were feeling adventurous, it looks like we might have some plays between our resistance here and our current trend line. But quite personally, I don't like this activity. I don't like how everything started to become uncertain again once we broke back into the bracket. So this would be an indicator for me to just kind of sit on my hands and watch, right? We don't have to play everything. We don't have to play it unless we like it. Now, with the break of the bracket, there's still some good potential for our upward movement here. Of course, we still need to pay attention, make sure that any of our structure stays the same. But one big thing that we should notice is that this structure is holding. We're bracketing above the top of our daily bracket. All right, we're getting a test back into it. And, oh, that is some pretty good news right there. So this is a point of contention. We've got some sideways action down here. So we're going to put our stop right at the point of control, and we're going to enter off the trend. Now we could take profit up here. Not a terrible idea, but we could also let this ride. So far, our trend has held. Adjust it a little bit for that other candle. Okay, everything is starting to wedge up more and more. We can protect this position, we can take our profit, or we can hang on to it. It's all up to us. We're getting a lot of bracketing into this wedge. Pressure is building. I like when pressure builds into wedges that are going upward. I mean, I also like when pressure is building going into wedges downward as well. But this is telling us that the sellers are having a lot of trouble. So why do we want to hold this long position? We keep hitting our head off of this ceiling, and I'm sure you guys have heard time and time again, well, it's only going to hit resistance so many times before it breaks down. While that's true, look at what it's doing when it's hitting support. It's still in this upward trajectory. Now consider how we got here, because remember, there's an overarching narrative that's going on in the day as we're playing to our activity. We had a huge liquidation break that brought us back into the bracket. We know that a lot of times bracket activity people will take back to it towards the midline, because that's a pretty safe play. So we can guess that there's probably quite a few people that got in short as soon as we broke back into our bracket. So probably right around this level. Now, we can confirm this by looking at open interest and the options chart and all that, but we're not going to look at that because, again, we're focusing on the most simplest things. We're focusing on our structure. What is the market giving us for information? We know that we followed a liquidation break into the bracket. We know that there are high odds that there are shorts that are getting trapped because we are watching the low get higher, and we're also watching the fact that nothing is pushing us up. So that tells us that there's probably a squeeze on the horizon. And it looks like we caught that at just the right time. Still testing. Look at that. We're still making those higher lows. Ooh, this would make me really nervous if I was holding that long position. But experience tells me to hold long. That, and I already know how the price action plays out today, so that does help a little bit. All right, we're starting to get price that's now holding above our previous day close. That's another checkbox for us, that maintaining our long position is not a bad idea. We're getting that higher low again, and now price action has finally burst through this wedge that it's been forming. Now we get the squeeze. And why does it squeeze? Well, if we look back here, where was our major support from the day? It was at our previous day close. Well, at this point, we've now broken back over it. Any short holding a position below here is now trying to liquidate, obviously starting with the people who are trapped lower and eventually working its way up. Because that's the cool thing about squeezes. As price squeezes, it forces more and more people who are trapped short to get out of their position. I mean, it's the same thing for liquidation breaks and pukes, right? All right. I want to target where we broke down before. All right. That candle probably would have taken us out of the position. Maybe. It depends on if there was enough volatility to pop it up. But what's this? We're still holding structure. A little bit of consolidation there. All right. So here's the thing. If we entered off of this third touch of the trend line that we had been building, this was an amazing long position play. Not once did our stop loss actually get threatened. We could have taken profits early, we could have scalped it, or we could have held out and let the play develop. It all depends on what we were seeing. It all depends on what we were feeling. You know, experience and watching these things play out time and time again is going to give you the confidence to hold a long position into price action that's wedging. Does it mean that this is absolutely going to happen and we are going to squeeze up? No, there's never a guarantee that that's going to happen. But when you've seen wedges play out a number of times in which price action does that for the structure, you know that you've got good odds. And then, of course, the other thing to consider, as price action's building further and further up this wedge, you can just move your protective stop up with this. So even if price does break back down, you're still going to take your profit when the structure finally breaks. You know, you don't ever want to watch a winning position turn into a loser, but recognizing where to put your stop losses to protect it, you want to base it off of structure. So if you're using a trend line to see everything building out, then you want to make sure your protective stop is riding up just under it, because it's a break that you want to kick you out. It's not a test that you want to kick you out of your position. Yeah. So, I mean, that's a pretty good day. We don't need to play out the rest of everything, especially now that we're getting into 2 o'clock. I would generally stop playing around 2 o'clock. I don't like the 2 to 3. I don't like the 3 to 4. It just, there's a lot of volatility that plays into it, similar to the morning run. So at that point, I'm trying to be out of my positions. But I hope that was educational for you guys. I hope you were able to see why certain things worked out the way they did and why certain things didn't, and why trading off of structure is important and building your narrative for the day based on what the market is telling you on your daily and your 15 and on your much broader scales. So we broke from the bracket and we seemed to test it on the shorter time frame, which for all intents and purposes, that kind of gives us the go ahead for jumping into the trend, right? So initially, yeah, we did. We were playing very bullish on today and we jumped into the trend. But the other thing that we want to consider, once we got above that value high, the volume really started drying up. So that should have been a flag to us. That should have been a really bright signal that, hey, this trend just doesn't have the legs yet. It's not quite ready. There isn't excitement drawing in new buyers now that we've broken outside of the value high. So you can use that as an opportunity to be like, okay, well, I can set a short position for, let's say, one of our previous lows, right? So even if I set it to enter, if we broke lower than there, even that's like what? We could set it to a 20-cent stop. And if we set ourselves to enter once the current high low broke, we would have ended up staying in this play and nothing would have threatened it. There were no pushes back up, and that would have been a huge win too. Let's say just from that we figured it out. We paid close enough attention that we would have been able to follow this down. There's no way we would have taken every little cent of profit, just because you're never going to catch the exact bottom. Unintentionally, you might a few times, but that's never going to happen. But this was a $4 move. So if we had been paying attention and drawing our support and resistance, after it moved down here and started coming back up, we could have taken our profit out of 351. Like, that's actually pretty realistic. Now, even if we had remained and held, once we saw it come back down and then make a higher low, that's when we should have gotten out as well. But look where that ends up, riding out as well. It's still at that 3.5 level. So we could have held that all the way to the bottom, watched that bottom fail, saw a lot of profits get sucked up, but we're still in that downtrend. But as soon as we made that higher low, that's when we should close our position and take our profit. And that's strictly just based off of structure, guys. And then, of course, we can just kind of see how the rest of the day played out. From that final break out of the wedge, we popped right back up to the value high, tested it again. It still wasn't drawing in the kind of volume that everybody was looking for. So guess what? One final liquidation break, and look where that liquidation break ended. The liquidation break at the end of the day was a perfect touch off of the bracket ceiling, and it ended us on what's called a spike in market profile. So the last thing I'm going to leave you guys with for today, the information you can take from this going into Monday, is that we have unfinished business up here. This is either an unfair high, at which point sellers are going to take advantage and rip us back down, which we can see we're going to need to break the previous high to sustain. So either it's going to be an unfair high where it's a good advantage price for sellers, or it's going to finally draw in those buyers who weren't quite ready to jump in here. They needed to see it liquid break a few more times. They needed to see this bracket really get its test. So the next thing to take away, if we do get a rip back down, but we still kind of come to the top of the bracket, well, rather than a trend, that's going to tell us that the bracket ceiling is actually going to be extending its range. And it'll probably end up being somewhere more along the lines here where our value zone was, because the activity happening above the value zone is going to end up pushing it up just a little bit on our 90-day chart. But we'll talk more about that on Monday when we do our morning report. Thank you guys so much for joining us today. I hope you enjoyed this video. I hope it was super educational for you. For those of you who are joining our stream live, we're going to go ahead and do some Q&A now at the end. And we'll actually go over a couple different charts for you guys and, kind of see what everybody's thinking.